We call gold nature's money. It's the only money that nature has created, and silver to some extent, and therefore it's the only money that has lasted. All man-made money has gone to zero without fail. So just think about that. So when people who think that crypto or Bitcoin is going to take over the monetary world, as you rightly said, let's wait 5,000 years and see where Bitcoin is then.
Yeah, exactly.
And that's why, of course, you and we have advised investors. We've done it for now 25 years to buy gold, keep it safely, either in if they have small amounts themselves, or otherwise with people like yourselves or ourselves in safe vaults around the world. It's very easy. Every single currency, as we know, in history has gone to zero. So we have these monetary cycles, and they last for 100 years, 200 years, depending on the time. But they always end, and they always end in the same way, with the money becoming worthless. And of course, the other side of that is that if money becomes worthless and we measure the gold price in worthless money, the gold price obviously becomes a very, very high price. So it really should look at purchasing terms rather than the price of gold measured in fiat money. I already back in the late 80s, early 90s, I came to the conclusion that we are now coming to the end of another monetary era, and that's why we studied carefully what and when that was likely to happen, and then we entered the gold market in 2002 at $300. We've seen gold go from $35 to $850, $35 in 1971 to $850 in 1980, and then a long correction down to $250 in 99, 2000. As we know, that's when every single central bank in the world sold gold. Even the Swiss National Bank halved their holding, and of course Gordon Brown, the UK Chancellor of the Exchequer at the time, also sold the UK gold.
Gold has always mirrored currency decline. In 1971, when the U.S. abandoned the gold standard, prices surged from $35 an ounce to $850 by 1980. After a two-decade correction, gold bottomed around $250 in 1999, just as central banks, including the Bank of England, infamously sold reserves. That was the turning point. Since then, gold has risen more than tenfold, not because it changed, but because money deteriorated. This history reminds us gold's role is not speculation, it's preservation. When fiat systems wobble, gold stands firm as nature's money, maintaining purchasing power across generations.
So that was the bottom, a very good sign, and that after that we went into gold because we saw that we are going to see the end of this era, and we saw, just like Richard Russell said, we saw coming inflation and destruction of capital values, bubble markets coming, and gold reflecting all of this. I thought, of course, stock markets would crash a lot earlier. I thought the 2007-9 period was when the end of the era, but I was wrong. But luckily, gold saw something more than that. Gold continued to go up between the 300 where we bought it and where we are now, 3,400. And I totally agree with Richard Russell. We haven't seen the beginning of the real bull market in gold yet. That's still to come. And that will be obviously a collapse of the monetary system. I mean, as we know, the most currencies, dollar, euro, yen, etc., they're all down 99% since 1971, even since 1980, now we have the final 1%. But as I always stress, that 1% fall of the currencies is 100% from here. And this is what we're going to experience. And we have all the elements. That we have the debt, which is growing exponentially. We have the deficits, which are also growing exponentially. And then we have money printing in most countries. And also we have extremely poor political leadership in Europe and in the US and around the Western world.
Today's financial landscape mirrors the late stages of past monetary collapses. Global debt has surpassed $315 trillion, deficits are exploding, and money creation has become the default policy solution. Simultaneously, political leadership in the West is fractured, populism is rising, and economic inequality is widening. These conditions echo the final chapter of previous eras. Weak governance often ushers in currency failure as leaders resort to desperate policies. The last 1% of currency value might seem small, but when a dollar loses its remaining worth, the collapse feels total. Gold thrives in these conditions because it doesn't rely on promises.
And that goes hand in hand with the end of an era. You get weak leadership. You need a really poor leader to take you down the last bit, and that's what we have. Trump is certainly doing all he can with totally now irrational decisions on a daily basis, and then getting more desperate because other pressures like the Epstein affair, etc. I think I'm sure Richard Russell is. I hope he's looking down from wherever he is, and because he wanted to experience this, and our dear friend and my friend also, Jim Sinclair, who was Mr. Gold, who died a year ago, also would have loved to see this because he saw it coming also. And I'm just lucky to still be alive. Intellectually, it'll be a very interesting period to watch this. But it will be, from a human point of view, it will be horrible. It will be absolutely horrible. We don't know exactly when it will start and how long it will be, but this is the time to be prepared for what's coming, in my view.
When uncertainty grows, investors often seek real estate, bonds, or equities for safety. Yet history warns against these options. Property markets in the West are overpriced, bond yields barely offset inflation, and stocks remain tied to fragile credit bubbles. Even high-end art, once a refuge for the wealthy, now trades at inflated levels. When the bubble bursts, these assets could lose 50–90% of their real value. Unlike them, gold isn't someone else's liability. It doesn't default, dilute, or depend on faith in institutions. That's why seasoned investors view it not as speculation, but as ultimate financial insurance.
We call gold nature's money. It's the only money that nature has created, and silver to some extent. And therefore it's the only money that has lasted. All man-made money has gone to zero without fail. So just think about that. So when people who think that crypto or Bitcoin is going to take over the monetary world, as you rightly said, let's wait 5,000 years to see where Bitcoin is then.
Yeah, exactly.
And that's why, of course, you and we have advised investors. We've done it for now 25 years to buy gold, keep it safely, either in if they have small amounts themselves, or otherwise with people like yourselves or ourselves in safe vaults around the world, and that is the best form of wealth preservation you can have, and actually one of the few forms also, because The property values will collapse, in my view, in real terms. Stock value is the same. Bond value is the same. A lot of bonds will become worthless because there'll be massive defaults. And the banking system will not survive in its present form. It's very clear too. So where can you safely put your money? Well, you can put it in land. Well, if you already own land free and clear, that's fine. That's very good. It's always been good throughout history.
Wealth preservation isn't just for the elite. Silver provides an accessible gateway for smaller investors, offering the same protective qualities as gold at a lower entry cost. Whether saving a few $100s or millions, allocating part of one's portfolio into precious metals creates a hedge against systemic risk. For centuries, the wealthiest families balanced portfolios with a mix of gold, land, and art. Today, only gold and silver remain truly reliable, as other assets sit in dangerous bubbles. Even modest holdings can serve as a lifeline, just as they would have in crisis-ridden economies like Venezuela.
But if you buy land today, the prices are very high, and it is not, at these prices in the Western world, it's not wealth preservation to buy land today. Same with property. Properties are extremely overvalued. So there are, and then you have the other, they said that wealthy people have 1/3 gold, 1/3 art, and 1/3 land.
Yeah.
And that's over time has been fantastic combination for preserving wealth. Today, they're actually all bubble assets except for the gold, because gold is just reflecting the destruction of money. And sometimes it moves a bit higher than that, but over time, that's what it does. But art, I think, which is the other one, which has been a good method to preserve wealth. You talk about real art. I think that also, because all the money in the world and a lot of rich people, art is now also overvalued. So I wouldn't buy art today either for wealth preservation, because the wealthy people are also going to get poorer. When stock markets come down by 75 to 95%, bond markets likewise, and property market maybe 50 to 75%, if not more, then that is not wealth preservation, and therefore the only thing you have left then is gold and some silver.
The decline of fiat currencies may be inevitable, but preparation is a choice. Investors who treat gold and silver as long-term insurance, not short-term bets, stand the best chance of protecting their wealth. Cryptocurrencies may hold potential, but they lack gold's 5,000-year track record. History shows that in times of economic upheaval, nations and individuals who held gold endured while others faltered. The coming years may bring financial turmoil, defaults, and systemic breakdowns, but also opportunities for those prepared. The lesson is clear. Preserving wealth today requires embracing assets that outlast empires, chief among them gold.
And I think that is a way that if people have any savings, whether it's only a few $100s, you can buy silver, or if you have thousands or millions, you buy primarily gold and some silver. But if people, we've seen a rise since we entered the market for ourselves and our investors almost 25 years ago. We've seen a rise of 11, 12, 13 times, depending on the currency. This is Western currencies. And I think that's just the beginning. And again, I'm not looking at, any investor in gold or silver will have proper wealth appreciation in coming years. But you're buying it not primarily for wealth enhancement, but you're buying it for wealth preservation. So you actually, with these two factors, enhancement and wealth preservation, is just the most superb investment as wealth as insurance in coming years, in our view. So it doesn't matter if you can't afford big amounts. Just buy a little bit of silver, buy a little bit of gold if you can afford it, and put it away. That's what's going to help you when the real problems come. If people in Venezuela had done that, for example, 25 years ago, that would have been a real lifesaver and insurance for them. But most people didn't, of course. Let's say in 2002, when we saw the light, or no, we saw it already in the 90s, but when we entered in 2002 properly, the gold market, we said buy up to 50% of your investment assets of gold at the time. So, and now we would say more than that. We're of course extreme from that point of view, but it's been the right decision.